Good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Wednesday. All right, the index extending gains today. The benchmark rose 0.6% to bring it back to the 6,800 level. That's 6,808.32 to be exact. This as unemployment numbers remain elevated in January, rising to 4 million unemployed Filipinos, but the rate holds steady at 8.7%. As you can see here as well, a last-minute rally here for the index, bringing shares higher again by 0.6%. But more exciting news here with some specific stocks, starting off with Double Dragon. The property player has just gotten SEC approval to put an offer starting today, the IPO of its Real Estate Investment Trust, or DDMP REIT. Now, offer period will be until March 16. That's going to be for 5.9 billion common shares with an over-allotment option of 594 million common shares at an offer price of 2 pesos and 25 centavos a piece. They hope to raise as much as 13.37 billion pesos. Listing date is on March 23rd. Not much movement here for Double Dragon, though. Prior to the release of that news, Double Dragon rose over 0.1% to end the day at 14 pesos and 42 centavos a piece. This will only be the second REIT listing in the country after Ayala Land, but another one might follow suit. Philinvest Land has just given the go signal to sell 1.36 billion shares of its unit Cyberzone Properties for a real investment trust. Now, each share on offer will be priced as much as 8 pesos and 30 centavos. That's going to raise 13.5 billion pesos. Over allotment option is at 163 million shares. But FLI, though, ending the day unmoved here, the stock is flat at 1 pesos and 17 centavos a piece. Recall that back in January, Philinvest said that office buildings, including buildings leased out to traditional and multinational business process outsourcing companies or BPOs, will comprise the property portfolio for the REIT company. Properties are located in Cebu City and Alabang, but while there's not much movement on these property stocks, one stock, though, getting quite a beating the past days. For today alone, Dito CME sank 25%. Now, and it has been tumbling for the past 5 days now. If you try to take a look at this chart right here, Dito is down by as much as 42.75% here over a 5-day period. Adrian Yu and Kerwin Chan of COL Financial say the stock's price is significantly higher than the implied fair value of Dito CME based on the Fairness Opinion Report, which implies a valuation of only 5 pesos and 84 centavos to 6 pesos and 71 pesos a share. Now, this Fairness Opinion Report is required by the PSE for a share swap to buy a stake in Dito. According to Carlos Temporal of AP Securities, he says investors should trade with caution as Dito may lack potential upside. Again, Dito, of course, just rolled out its services this week here, again, from being priced at 15 pesos a piece 5 days ago. Dito CME now at 9 pesos a share. Here are other headlines we're keeping our eyes on. The Energy Department believes the implementation of carbon taxes would hinder the country's competitiveness if done prematurely. Energy Secretary Al Cusi says while there is a need to transition to clean energy, the shift has to be done properly. He says the Philippines isn't ready yet and needs to first build capacity to execute such taxes. There have been concerns that the burden of carbon taxes would fall most heavily on energy-intrusive industries and lower-income households. The Energy Department is looking to increase the share of renewables in the country's energy mix by 2040 to 40,000 megawatts out of the total 65,000 megawatts capacity. Now, the Senate Committee on Agriculture is proposing the creation of a fund supported by import tariffs that could aid the hog industry. Panel chairperson Senator Cynthia Villar says the fund is modeled after the Rice Competitiveness Enhancement Fund, or RCEF, which gets 10 billion pesos a year from tariffs charged on liberalized rice imports. Villar says the funds raised from pork import tariffs could support disease control efforts, insurance rather, for hog raisers, and hog repopulation initiatives, among others. Industry stakeholders are still opposing proposals by the DA to lower pork import tariff rates to boost supply after the impact of the African swine fever on hog inventory. Digital banking has seen quite a push since the pandemic began, but has enough been done to make it more inclusive for Filipinos? To pick her brains, we have on the show Aradhna Sharma, Regional Sales Director of ADVANCE.AI. We speak to her straight from Singapore. Good afternoon, Aradhna.
Good afternoon, Jes. Thanks for having me on the show.
All right, just looking back at the past year, how much has digital transformation and digital banking grown in the Philippines since the pandemic happened?
Look, I mean, digital banking has been slow to arrive in Philippines, slower, in fact, than most countries around Asia, but the pressure for change has been building for quite some time. I mean, clearly, COVID-19 has accelerated the need and demand for mobile and online banking, and I don't believe this behavior is irreversible for consumers. So I think the real question is, are traditional banks and financial services ready and equipped to deliver this demand?
Which also begs the question, are banks and other financial institutions in the Philippines investing enough on technology, especially AI?
Sure. Look, I think if the financial inclusion is to improve in Philippines, I don't believe the banks in Philippines are doing enough just yet. However, I do believe that the plans to release a digital banking license will definitely help improve businesses to cater for the needs for online services, and also making finances available to people. You'll see a lot more activity in the economy, and again, this will force the businesses to change how they currently do business. So currently, I think people are still holding on to what's going to happen with the digital banking license. But then again, we've seen ATM transactions in Central Manila drop 25% since the enhanced quarantine measures were put in place in May 2020. At the same time, we've seen huge spikes in digital or mobile banking signups. For example, Union Bank reported an increase of new accounts opening digitally by 27-fold since 2019. So clearly, I think COVID has definitely accelerated this, and banks need to do a lot more.
All right, but at the same time, looking ahead, are we seeing a growth in total share when it comes to bank transactions, especially with digital banking?
Yes, we are in Philippines. Because there's only very limited banks that offer digital financial services at the moment, they are at capacity, increasing online signups day after day in 27 folds. So we are seeing those banks increase it, but obviously the banks that don't offer, there is very limited activity in new account signups or new financial products being offered because it's not accessible to majority of the people who don't have access to financial services, such as the underbanked population in the Philippines.
But we also see areas outside the capital slowly catching up.
Yes, I think the banks will have to do a lot more to spread the financial inclusion into Tier 2 and Tier 3 cities, allowing businesses and customers to transact online. With the increase in demand, which we're already seeing in the Philippines at the moment, digital banks will require advanced credit scoring, risk assessment technology to build credit profiles of largely unbanked and underbanked population and SMEs who need access to loans, while ensuring a sustainable approach to being able to offer these services.
Given that, Aradhna, are you seeing enough collaboration here between banks and fintechs and traditional banks as well as telcos in order to at least improve inclusivity of a financial, of a fintech in general?
Yeah, that's a very good question, actually. After long talks, even with ourselves, ADVANCE.AI, we've just partnered with CIBI in means of collaborating to be able to provide accurate credit scoring assessments and evaluations using a combination of traditional and alternative data while leveraging AI, which obviously plays a critical role to cater for a large population in the Philippines. So we are seeing collaboration, but not enough.
And at the same time, we've seen an improvement in how banks are leveraging AI to be at least more data-driven when it comes to their policy decisions.
Yes, I think banks are looking at options, but in terms of implementations, we've only really seen 4 or 5 major implementations across banks. So AI and big data can automate a lot of the manual processes within banks and financial services sector that make them smarter, cheaper, faster. And I believe they need to accelerate this digital transformation in order to keep up with the rat race as the big techs enter the Philippines market, as well as fintech companies who will definitely give these banks quite a competition. And eventually they will not have a choice.
Now, from the lenders, let's talk about the consumers, the Filipinos themselves. What are the major holdups in terms of acceptance of digital platforms?
Look, I mean, according to the global surveys, 34% of Filipino adults don't have an account at a formal institution, compared to Indonesia, which is 49%, 82% in Thailand, 85% in Malaysia. So that means almost 2/3 have no bank account and cannot access financial products or services such as credit, savings, insurance, pensions, remittances. So really, in order to increase this financial inclusion and access, it requires major long-term public and private investment reforms, such as cost and nationwide coverage for high-speed broadband, which is critical for this to work. National identification systems, your financial literacy programs, so no one is left behind in financial inclusion, expanding coverage of credit reporting requirements, data privacy and security regulations, financial incentives to support startups and small businesses for digital transformations. And for private sector, it's really understanding a long-term business strategy and a roadmap that actually supports financial inclusion. So they need to understand what is it they're offering, what gap they're covering in the market, what is their risk appetite, and potentially what technology capabilities they are going to need to be able to offer their products and services online to make it accessible.
Would you say, though, that fees are still a concern here among Filipinos?
Yes, I would say so, because traditionally banks can charge a lot higher for fees. However, with the digital banking license, I believe that this will change, because a lot of what traditional banks do, which is, front office ID verification, document verification, in the middle office, KYC requirements, ND projects, these are all currently done very manually. But you'll have these digital banks enter the market and fintechs that will change the way this is done, and they can do it a lot cheaper and faster, which means consumers will get the benefit of a cheaper fee.
All right. Now, lastly, before I let you go, how is the Philippines faring with the rest of Asia when it comes to digital banking? And what can we learn from our neighbors, especially the likes of Singapore?
Sure. Look, I think Philippines is heading in the right direction, especially with the digital transformation roadmap by 2023. In terms of learning from the neighboring countries like Singapore and even Indonesia, who have already released the digital banking license recently. So how Singapore really dealt with it is encouraging innovation, actively courting foreign investment in tech talent, supporting startup culture, and even investing in some of them as government bodies, developing clear regulatory frameworks, trialing innovation products and services in a sandbox environment to encourage collaboration between private and public sectors, to experiment what solutions work and what don't, and reducing the red tapes and making it easy to register and do business. Grooming tech talent by investing in education and continuous learning through programs like we have Skills Future in Singapore, government grants for various digitalization initiatives to encourage organizations to go on a digital transformation journey. Indonesia too has set up several government associations both to encourage the spirit of innovation and digitalization in Indonesia. but supporting the local startups, having grants, regulation, licensing to protect consumers and data privacy. And the recent eKYC mandate for financial institutions to support, again, digitalization. So all these things have helped. But lastly, having partnered with various traditional banks, neobanks, and big tech companies across Southeast Asia, including Philippines, our clients are realizing that big data is really the new oil.
Mhm.
In a digital era, not effectively managing and utilizing data can leave traditional institutions behind. Transactions hold valuable data that offers insight into consumer patterns and needs, as well as credit score, risk profiling, among other intelligence. So analyzing data by leveraging AI and ML to access data intelligence helps banks to tailor and target solutions to win customers while delivering superior customer service. Data, therefore, has become critical in the battle to gain market share. Banks need to reinvent themselves at a much faster rate than the big tech and companies like Grab and Gojek being one of our clients. And technology-savvy digital banks are the ways they lose out on the digital banking rat race.
All right, much to be done here when it comes to making use of digital data, but at least the Philippines already in the right direction. Thank you very much for your time this afternoon. Aradhna Sharma, Regional Sales Director of ADVANCE.AI.
Thank you, Jeff.
And those are the biggest news this trading day, March 10, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.